The UK economy has been struggling, as we know, when you look at GDP, borrowing, etc., which I will be covering more specifically in our next video. But in this video, we'll be looking at how many high net worth individuals are leaving and have left the country, and trying to answer the question of what millionaires actually contribute to the UK economy, because the figures are very interesting and possibly surprising. So please do like the video and subscribe to the channel so I can continue to offer more content for you in future. Stick around to the end of this video to find out what services Coin Knowledge offers. Just a quick reminder that nothing contained here is financial advice, and let's jump straight in. $10,800 millionaires left the UK in 2024 apparently, which was more than double the number that left in 2023, or a 157% increase, and was the second highest amount in the world, behind just China. This number included 78 people worth more than £100 million and 12 billionaires. This means that since Labour and Keir Starmer came into power, one millionaire has left the UK every 45 minutes on average, with this large number of millionaires leaving equating to about 530,000 average taxpayers. Given the large amount of tax that these people pay compared to the average taxpayer, which we will come back to a bit later in this video. And this data came from reports by Henley and Partners and analytics company New World Wealth that I'll include links to in the description of this video, with another report by UBS called the Global Wealth Report 2024 that I actually covered previously in a video on the UK, looking at whether the UK is heading for a recession, that you can find a link to here in the description if you want to check it out. But this report expects the number of millionaires in the UK to decrease until 2028, significantly more than the countries mentioned here, given that the UK is on the right and is negative, as well as the world average, which has the red box around it. Rachel Reeves' autumn budget is largely cited as the main reason for people leaving the UK, specifically due to increased taxes for business, increasing capital gains tax from 20% to 24% at a higher rate for individuals, which is an increase of 20%, and scrapping the non-dom tax regime. But does this really matter? And is the size of this exodus of high net worth individuals really as big as it seems? Because some people are calling this a mass exodus of millionaires, which isn't quite accurate, given that this equates to about 0.35% of all millionaires in the UK, with there being over 3 million millionaires in the UK at the end of 2023, according to UBS in its Global Wealth Report that I've just mentioned, having the third most millionaires out of any country after the United States and China, with it being in 11th place actually, if you work this out as a percentage of the adult population in the country, rather than just the number of millionaires, with Switzerland being number 1 and Hong Kong number 2 in that case. Some people will also say about millionaires leaving the UK, just let them go if they want to, and some will think that they don't add anything to the country or don't really pay any taxes. But is that true? What do the rich contribute to the UK economy through taxes? Well, the UK brought in over £1 trillion in receipts in 2023 to 2024, of which income tax, national insurance contributions, and VAT were the largest sources of revenue for the government. And if we look at income tax, the 10% of taxpayers with the largest incomes contributed over 60% of income tax receipts, with the IFS, or Institute for Fiscal Studies, estimating that the 50% of households with the largest incomes contributed nearly 80% of taxes. Indeed, 60 of the wealthiest people in the UK contributed more than £3 billion in income tax between them per year, with them admittedly earning much more than this, but also likely paying other taxes on top of this, such as capital gains tax. These 60 people had incomes of more than £50 million each and made up just 0.0002% of UK taxpayers. However, they paid 1.4% of the total income tax receipt. So this shows that the UK does rely on the largest earners to provide more tax receipts. And to put all of this into perspective, the median household wealth in Great Britain was £193,700 in 2022, which is the latest data by the ONS, or Office for National Statistics, that I have included a link to in the description if you want to check it out for yourself. The wealthiest 10% of households had wealth of just over £1.2 million, and the least wealthy 10% had wealth of £16,500 or less. And it's not just individual millionaires leaving the UK. Ernst & Young published a report on the 6th of January 2025 detailing a challenging 2024 for the London Stock Exchange. It did highlight some positives, which will hopefully lead to a rebound in activity in Q1 of 2025, such as the listing of Canal Plus or Canal Plus in the final quarter of 2024, which was the largest debut on the London Stock Exchange since 2022. However, only 18 companies listed on the London stock market in 2024, which is the lowest number of listings since Ernst & Young started recording this data back in 2010. Fewer proceeds were therefore raised in 2024 compared with 2023, an 18.3% decrease, and 88 companies delisted or transferred their listing from the London Stock Exchange in 2024, citing declining liquidity and lower valuations compared to other markets, particularly in the United States. Also, just to give a recent example in 2025 of a crypto company, Andreessen Horowitz, or A16Z, the large VC firm, is closing its London office and moving its focus back to the US, given Donald Trump's administration's favourable stance on crypto and crypto policies, which is unfortunately less than 2 years since it set up an office in the UK, saying that it was all in. But I'll try to cover some more examples in the next video on the state of the UK economy. And all of this has led to Rachel Reeves softening or backtracking on her approach to the non-dom tax rule that she announced in the autumn budget. This was introduced 200 years ago, but it's basically where those who live in the UK but who are tax resident elsewhere avoided paying income and capital gains tax on their overseas earnings for up to 15 years, with the UK government changing this and planning to subject non-doms to inheritance tax on their worldwide assets, including those held in a trust. But Rachel Reeves at the World Economic Forum in Davos, that I did a video on recently also, said that they've been listening to the concerns by non-doms and will be amending the rules slightly by increasing the repatriation facility, which enables non-doms to bring money into the UK without paying significant taxes. So this will be seen as a slight win by non-dom lobbying groups like Foreign Investors for Britain, but it will be interesting to see if it makes any difference at all to those looking to leave the UK, because the small change that I've just mentioned has already been quite widely criticised, saying that it doesn't go nearly far enough and is frankly too little too late. Because according to HMRC, or HM Revenue and Customs, in the 2022 to 2023 tax year, there were at least 83,800 non-dom and deemed domicile taxpayers, who are previous non-doms basically, with combined tax and national insurance contribution liabilities of £12.3 billion. And non-doms brought in around £8.9 billion in tax revenue, which is higher than the previous tax year and was at its highest level since the tax year ending 2017, with Rishi Sunak's wife, Akshata Murthy, holding non-dom tax status while he was Chancellor, with her paying the £30,000 that was needed to maintain her non-dom status and not pay tax on her large income earned abroad. But with there being reports like that from Oxford Economics, that I'll again include a link to in the description of this video, which indicate that the vast majority of non-doms surveyed would leave the UK, with many better options available to them in other countries, and that the UK wouldn't actually benefit from this overall, with the Adam Smith Institute saying that the UK could actually lose £6.5 billion by 2035 and 23,000 jobs by 2030 because of this non-dom tax regime change, due to lower investment in capital, a drop in tax revenue, reduced consumption, and therefore a loss of jobs. Whereas Rachel Reeves at the Treasury believes that the non-dom reforms will raise £12.7 billion over 5 years, to fund investment projects and improve living standards across the UK. And this is all happening amid continued calls from some members of the Labour Party that an additional wealth tax should be imposed, including Brian Leishman, who you can see a bit of here. So the difficulty the UK government has is trying to grow the UK economy with very high borrowing costs, therefore needing to increase tax revenue, but at the same time, not drive high net worth individuals out of the UK. You can simply move to another country and pay much less tax, including on their crypto gains. And I'll be covering more of this in our next video on the state of the UK economy, so that's one to keep an eye out for. But that ends this video, and as always, I'd love to know what you think about the number of millionaires leaving the UK in the comments below. What's your take on it? Just a reminder that if you're interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. You can sign up for a free account with Coinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific crypto tax advice based on your personal circumstances, I've partnered with a leading crypto tax company in Miner, which is part of the company Davos that offers other services such as wealth management, restructuring, offshoring, etc. But I'll leave a link to contact them directly in the description to this video. I've also included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage out there, with 2 new models released recently in the Trezor Safe 3 and Trezor Safe 5 that I actually did a video on recently that you can find a link to here and in the description. And finally, if you're looking for a portfolio tracker for your crypto portfolio, then I've included a link to CoinStats in the description of the video, which is the leading crypto and Bitcoin tracker on the market. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.